So much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vachrajani. We will take you through the next half an hour. Unfortunately, well, this show has gotten curtailed just a tad bit, but if you've been tuned into the channel, you will know why that is. In fact, quite a bit of that still flashing on the screen. It has to do with the outcome of the meeting of the Monetary Policy Committee. And if you tuned into just the 5 minutes at the start and were a little disappointed that there wasn't a repo rate cut, as some people were hoping would be the case, well, you wouldn't have been disappointed because there was action in the form of easing. It was easing on the liquidity front, the cash reserve ratio. And in case you were wondering what that is, banks have to keep a certain amount of their net demand and time liabilities, basically their deposits, with the Reserve Bank of India as a reserve, as an emergency fund in the event of a redemption event. That is called the cash reserve ratio. As things stand right now, that stands at about 4.5%. Not about, exactly 4.5%. What the RBI governor has said is that the MPC has decided to allow banks to cut that cash reserve ratio over a period of 2 fortnights, starting from the 14th of December and heading into the 28th of December, 25 basis points each. They're cutting that to 4%. And what that means is that over the course of a month, you will have a substantial amount of liquidity, a substantial amount of money that is currently parked with the RBI that suddenly gets freed up to go into the system. The banks will be able to lend this out theoretically. Let's see how that pans out. In fact, we will get you a banking, no, I shouldn't say an expert, but a senior functionary in one of the private sector banks to tell you about where this likely will go. So let's pull up the Nifty Bank because that will give you a picture of how the market took this. Initially, you saw a bit of a drop when there was the clarity that there would not be a repo rate cut. But then it was a recovery when the CRR cut or the cash reserve ratio requirement cut was announced. And at this juncture, you have gains of about 0.3%. Similar gains, I think, more or less for the Nifty 50. You will see a similar trajectory. We may be flat right now or thereabouts, but you see a similar trajectory for the benchmark Nifty 50 as well. We've got our experts in. We've got Avinash Gorakshakar of Profit Mart Securities, as well as Kushal Gandhi joining in. Thanks so much, gentlemen, for taking the time. We will take as many questions as possible, and so sorry to keep you waiting. Avinash, always glad to have you on the show. Kushal, you as well. Avinash, I'll ask you what your initial take is and whether or not this changes anything from what you're thinking of heading into next year. Of course, that GDP expectation cut is also a big item to focus on.
Yeah, I think, good morning, Alex. I think clearly the kind of commentary which was expected from the governor is as per what, most street people were expecting. And I think, the CRR cut was on expected lines. I think, as you rightly mentioned, a lot of liquidity with RBI would now be available with the banks. And that would obviously be a very good kind of cushion to, lower the interest rate structure. It's a good beginning, but I think, on inflation, he clearly commented that food inflation has moved up significantly and it would take a little more time before we see that elevated food inflation coming down. So I think net, I think, we might have to wait for maybe another 3 to 4 months for a proper rate cut to happen. And I think the markets are definitely happy that at least the CRR cut has happened. Maybe the rate cut, which was anticipated, has not come in. I think at this point of time, Alex, the markets are definitely looking at the fact that the next, kind of commentary which possibly comes from Mr. Shaktikanta Das or maybe from the new governor is going to be something which is going to be positively, pleasing to the markets in terms of inflation and in terms of the rate cut. So I think net, we are quite positive on the market. We still feel that, rate sensitives could possibly take a lead in some time. I mean, maybe as of now, it may not impact them. But overall, liquidity easing is going to help some of the larger corporates, and that is definitely a good beginning.
In case our viewers are wondering what Avinash said at the end and they're saying, why would Shaktikanta Das not present the next monetary policy outcome? Well, he is due to end his term, and of course, there is an expectation that he will be given an extension that has not been announced yet. He's already, by the way, in case you didn't know, the longest serving Reserve Bank of India governor in the history of independent India.
Right, absolutely. Let's move on to our queries, Alex. For viewers who are tuning in, you can ask all your stock-related queries on the number that is flashing on your screen. The number that's flashing on your screen, you can call us or you can WhatsApp us on the number which will, yes, there you go. That's the number on which you can WhatsApp us all your queries. Let's move on. The first query is from Nivendu Sharma, who's from Hyderabad. He and his family together are holding around 400 shares of Lincoln Pharma, and he wants to know whether he should book a profit or should he keep holding it with a stop loss. He's not given the price at which he's bought it, so we don't know whether he's making a profit or a loss. But Kushal, I'll come to you for this one. How does Lincoln Pharma look on charts?
Lincoln Pharma looks very bullish. The stock has given a very nice breakout from a cup and handle pattern, with some monumental volumes. So I think all in all, it's got a very positive trajectory. But if you've seen the last 3 odd sessions, the stock has already moved up 50%. So I feel there should be some profit booking. They should save their capital and wait for the further trajectory. I'm bullish on the stock for a target price of 980 followed by 1000.
Okay, I believe we have a first caller for the day. We've got Ramu from Gujarat who's calling us. Ramu, if you can hear me, good morning to you, and how can we help you?
Good morning to all, and I need to say thank you to the NDTV. I am recently entered into the stock market and gaining the profit.
Yes.
And my question is, I am holding 250 stocks at the stability at the price of 31 rupees.
Okay.
And the last 2 days it's getting upper circuit continuously, and I need to know the target price when I can exit, or I need to hold on it.
Okay. Not too much data, I'm guessing. So I cannot go to you, Kushal, on this one, but do you have any coverage on this, Avinash? What would you say about Sagility? It has indeed gained quite considerably. So 31 is the buy price, 39 is where it is, very close to 40 right now. Would you sell if you can?
Yeah, I think my sense is, the investor, if he has purchased the shares recently, I think, it's still too early to take a call on whether one should exit the stock, because I think recently the company came out with their first quarterly numbers. Very strong numbers, Alex. I think cash flows have also been very strong, and plus they operate in a very niche business in the US, hospital market. I think the size and scale of the opportunity for this company is quite significant. So I think, if the investor can give a time frame of at least, say 12 to 15 odd months, then I think you could expect a further risk reward in the stock, because this is one of those unique companies which I don't think has any comparable peer in the Indian market as of now. And it operates in a market where it competes with global peers. So I think very solid business, good promoters. So I think he can hold on. I think wait for some further 12 to 15 months wherein he could get a better risk reward.
Avinash, Kushal, do stay with us. And viewers, I know that you have a lot of questions regarding what was just announced by the Reserve Bank of India governor. And we were talking about getting you somebody from the banking space to give you some clarity on how this will likely pan out. Rajiv Anand, Deputy Managing Director of Axis Bank, is joining me now. And who better to tell you what this would mean for the banking sector and indeed for you. Rajiv, thanks as always for taking the time and for speaking to us on NDTV Profit. Some people were murmuring, yeah, our pleasure entirely. Some people were murmuring that there was a possibility of a repo rate cut. And when the RBI governor stated that there wouldn't be one, perhaps some people were a little bit disappointed. They were also talking about a CRR cut. And whenever I've been taught about monetary policy, Rajiv, you correct me if I'm wrong, the repo rate is looked at as a scalpel, whereas the CRR is looked at as a hammer. Correct me if I'm wrong, what the impact of this will be.
I think in an environment where inflation in India currently is running at 6.2%, although the trajectory is expected to tend towards 4 over a period of time, it was highly unlikely that the RBI would cut the repo rate at this point in time. But on the other side, we've all seen the shocker in terms of the growth number for Q2. And so therefore, there was some expectation, from certain quarters that to be able to support growth, the RBI would cut the repo rate. But I think, what the RBI has done is actually, quite prudent, that they have kept their eye on the ball, i.e. inflation. And the expectation is that sometime around February, we could see inflation becoming a little more manageable, and perhaps expectations of a rate cut sometime post-February is the expectations that the RBI has built in this policy. However, on the other side, we've also seen the short-term rates, i.e., the rates between the repo rate and let's say a one-year fixed deposit continues to be quite high. And what the CRR cut will actually do is that it will bring that rate down, meaning that if you are a depositor, you should expect that deposit rates will come down in the months to come because of the fact that the CRR has been cut. So it's a liquidity measure. Short-term rates will come down because inflation still continues to be sticky in an environment of relatively weaker growth. I think the expectations of a repo rate cut have been pushed out by some time.
Okay. Rajiv, implications of this 1.16 lakh crore coming in to the banking system over the course of 2 fortnights starting the 14th of December. In the context of the measures that have been taken and the commentary that has come in over the last 2 quarters from the RBI itself about the kind of lending that banks and the financial institutions have been doing, of course, there is no mandate to say they will utilize these funds in a certain manner. But because some banks and institutions have been more wary in the unsecured space, where do you think this money will be utilized?
Let's look at it like this. The 1.15 lakh crores was earning the banks nothing because it was impounded as CRR. Now that it is being released, at the very least, we can actually go out and put this money in overnight liquidity at 6.5%. Obviously, what banks would do with this money is they would put this money into a mix of corporate lending, retail lending, including unsecured, and so therefore this CRR cut will positively impact NIMs of banks by somewhere between 3 to 5 basis points. Not in this quarter, but because the CRR is being released in 2 tranches in 2 fortnights, the impact will come from the next quarter onwards.
Okay, that's an interesting point that you make, and so therefore no immediate implication, Rajiv, you would think on the lending rates at all, or not lending rates, but lending growth at all in any segment on account of this?
Because of the macroprudential measures that the RBI has taken, I think RBI has consciously pushed the rate of credit growth down over the last, let's say, 6 to 9 months. I think we've also seen that, particularly on the unsecured side, risk has gone up, although from relatively lower levels. I think the CRR cut is a welcome relief. We should see credit growth going back up slowly but steadily as we go forward.
That's a fair point. I do want to get your opinion on the sharp reduction in the GDP growth expectation, 6.6%. Not very often that you see the central bank cut from 7.2 to 6.6%. Was that something that you had anticipated? And what are the implications for the economy as a whole? Of course, second half, we're expecting there to be more spending by the government and perhaps to a certain extent capex. Is that something that you're seeing at all take place, private capex? Any signs of that recovery?
I think if you looked at the Q2 numbers of corporates as well, I think you would clearly see that there was a palpable slowdown in the economy. And I think at this point in time, the RBI is projecting that yes, growth will go back up from the 5.4%. But our own belief is that perhaps the expectations that the RBI has put out for Q3 and Q4 is actually a tad optimistic. I think there is certainly risk to the downside on these expectations in the second half of the year, and I think this increased growth is predicated on increased, particularly increased government spending, and whether the economy has the absorptive capacity to take on this high level of government spending for capex in the second half of the year. I think is something that we will need to wait and watch. But I think there is a palpable slowdown in the economy.
And then the last question, Rajiv, that I want to ask you today is you expect, and you said this earlier, you expect that a rate cut could potentially come through early next year, February perhaps. What is your base case assumption as to how the trajectory will be in terms of the rate cuts? Of course, one would assume that this entire cycle will be shallow.
Absolutely. I think the problem that we've seen so far is, on the one side, we have certainly, like I mentioned to you, the slowdown in the economy is palpable. But on the other side, we are certainly seeing inflation being quite sticky at this point in time. We need to see those inflation numbers, come down into the four handle before we can even think about a rate cut. So I think the RBI's own expectations is that we will see a inflation number in the vicinity of about 4% sometime in February. So the earliest expectation that we have as far as the rate cut is post Feb. But having said all that, I think the rate cut cycle itself is going to be quite shallow at the very best in this sort of an environment. We don't expect the rate cycle to be more than 50 basis points, which means that the 6.5 could at best go to 6%.
Okay. Wow. Thanks so much, Rajiv, for that perspective.
Thank you.
Reinforces certain ideas that I had as well. Thanks so much for taking the time.
Thank you so much.
All right. Let's go back to Ask Profit. Sorry to keep you waiting, but this was an engaging conversation. Hopefully it gives you perspective on what to expect heading into next year as well. And I believe we've got our next caller.
Yes, Alex. Shweta, thanks for waiting. I believe you're calling from Hyderabad. How can we help you? Can you hear me, Shweta? Okay, I don't think we're patched. Yeah, she can. Hi, Shweta. How are you doing? How can we help you?
Hi. Hi, I'm Shweta, and thank you so much, Alex and Mahima. You guys are helping me a lot. And I would like to thank even Neeraj, Tamaina, and Tamanna also. You guys are making us sit in front of the TV throughout the day.
Sure, I'll convey your regards to them.
Yeah, my question is regarding Garden Reach.
Okay.
I bought 40 shares of Garden Reach at price 2557.
Mm-hmm. Okay.
Now I can see there is a small reversal happening in all the different sectors. But is there any chance I can recover all my losses, or if not, at what levels can I take an exit? Because I already have HAL and I recently bought BEL also.
Okay.
Both of them are at no profit, no loss situation. So I would like to switch from Garden Reach to any of these two.
Got it. I got your question, Shweta. Avinash, I'll quickly take this one with you. Your view on Garden Reach as well as for the entire defense pack.
I think first on the defense pack, I think it's a long compounding story, and I think if the investor has got at least a couple of years kind of time perspective, I think value can be generated. I think at these levels, of course, valuations don't seem to be cheap. They are fair to expensive, but I think if you look at the order wins, the visibility of top line for most of these companies, I think the government of India is going to focus on defense in a big way. In fact, my sense is that over the next 3 to 4 months before we end this financial year, the government may announce a large capex for sectors like railway, defense, which would obviously propel some of these stocks going forward. Coming specifically to Garden Reach, I think some news flow has come in for Garden Reach. They've got some fresh orders, but I think the price at which the investor has entered is slightly on the higher side. So unless the investor gives a 2-year perspective, I don't think you're going to make money in the short term. These levels would take some time for the investor to actually break even. At best, I think probably if the investor has got some money, you can average the stock, but take a 2-year view, and I think stay invested.
Shweta, hopefully that answers your question, and thanks so much for your kind words. We really appreciate it. The next question is from Vishwanta Reddy, who's writing in from Madanapalle in Andhra Pradesh, and he's got NHPC, which he's bought at levels of 27. He's been holding since 2018, so he's making a considerable gain here. The stock is in fact up and about in trade today as well. Kushal, what are the indications on the chart? Potential for further upside, or should he book out right now?
I'm positive on the chart. I mean, after a 36-37% odd correction, the stock is again bottoming out. And today's move is just about that. It's a very nice breakout from a cup and handle pattern. So I feel that trend is going to go up, and I'm positive for NHPC from a shorter term point of view for a target price of 93.
Is the target price. All right. I believe Kiran is calling us from Hyderabad. Kiran, good morning to you. How can we help you?
Good morning, sir.
Yes.
Actually, I am holding 400 shares of Adani Ports at the rate of 1280, sir.
Okay.
So
And-
should I hold it or?
Okay. So when did you buy this?
Recently, sir.
Okay. Recently when the
Today.
stock. Yeah. Okay. Recently.
Yes, sir.
Okay. So, but when you bought it, was the perspective based on the price action or was it based on the fundamentals?
No, sir, actually I have bought 200 shares at the rate of 1180.
Okay.
And another 200 shares at the rate of 1280, sir.
Okay. So, Kiran, how long can you hold this for?
6 months, sir, actually.
6 months. All right. So based on the technicals, you would like to get a perspective on what the stock price action will be. Let me take this across again to Kushal. Kushal, on the charts, of course, we've seen a pretty sharp movement in the recent past. Does that momentum continue? And what is the kind of upside that you could potentially see in this kind of in this stock?
Considering Adani Ports, I mean, there's been a phenomenal recovery, and I feel the momentum can still continue. And it's a very good price, to buy at because the risk reward is quite favoring. So yeah, I'm positive on the charts for a target price of 1430.
So could you repeat that? Could you repeat that target, please?
1430.
1430. All right. Unfortunately, we're out of time. This has been a curtailed session. I need to give you a standard disclaimer as well. I completely forgot. Adani Ports, part of the Adani Group. NDTV Profit, part of the NDTV Group. NDTV Group, of course, owned by the Adani Group as well. But on that note, I'd like to thank Kushal as well as Avinash for joining in. I promise the next time we'll spend more time speaking to you and getting more questions to you. Thank you so much in any case for taking the time. Pleasure having you. And viewers, well, we tried to answer as many questions as we possibly could, but we also tried to give you some perspective on the Monetary Policy Committee's decision, and hopefully that holds you in good stead over the course of the remainder of the session as well. We've got lots lined up over the course of the day from Mahima and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. This is NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start